Hello and welcome to Between the Lines, the podcast that dives deep into the stories redefining Asia-Pacific's reinsurance landscape. I am Mithun Varki, Editor-in-Chief of Insurance Asia News. In this edition, we'll break down Swiss Re CorSo's exit from Hong Kong, how a fragmented global trade is fueling demand for product recall insurance, and share insights into the big stories on our radar. We're also excited to have Ben Qin, Head of North Asia and Australia at Descartes Underwriting, joining us to discuss the evolution of parametric solutions in Asia Pacific.
Yeah, we'll never see the lower retention points again, right? So I think anecdotally, everyone talks about moving away from traditionally what's a 1 in 5 year to a 1 in 10 year attachment point. Now everyone's looking at 1 in 20 year, 25 year plus minimum. So then you got to go, well, where does that gap go, right?
With me today are Deputy Editor Andrew Mullen and Joanna Newman, our reporter, who's joining us from Hanoi. Andrew, Joanna, welcome. Hope you both had a great break.
Thanks for having me. It's good to be here.
And it's good to be back. We were looking like we're having not much to talk about up until last night, and we had two quite big exclusives to work on in the newsroom. First of all, we had Hong Kong-based Steve Hutchinson. He's leaving Howden for Willis after just 4 months, having only joined from Marsh in January, so that was quite a surprise. And then, as you mentioned as well, in Hong Kong, Swiss Re CorSo has confirmed it's closing its office in the city as it surrenders its license. So two juicy stories that we had at the start of the week haven't looked like it was going to be a bit quiet.
Yeah, indeed. The big breaking story for us this week was Swiss Re Corporate Solutions' exit from Hong Kong. The commercial insurance arm of reinsurance giant Swiss Re is surrendering its license in Hong Kong, which came as quite a surprise.
So yeah, this turned out to be a big of a shock for us. We were kind of about to leave the office last night, and then this kind of seemed to come out of nowhere. Yeah,
it was quite a surprise. I mean, I think the company sent out emails to the staff in Hong Kong yesterday afternoon, and I picked up from my sources in the market contents of the email, followed up on it pretty quickly, and thankfully Swiss Re confirmed its plans in the region.
Mithun, you got an email from one of your sources, but did they provide any reason why this sudden change happened?
I think the idea is Corporate Solutions to consolidate its Greater China business in its mainland office in Shanghai. This follows from an announcement they made earlier this year about restructuring their team globally into market units. And one of the market units is mainland China, which is offices in Shanghai and Hong Kong. And I think the strategy for Corporate Solutions, as Global CEO Ivan Gonzalez told me earlier this year, was to focus on large corporations. And I would think it makes sense for them to focus on the Chinese companies, the large Chinese corporations. And when they announced the market units restructure, the new structure, they had said that the idea is to be closer to the customers. And I think if you read it all together, it makes sense that they would want to shut down the Hong Kong office and be in Shanghai.
But this is quite a blow for Hong Kong, right? Because what does it mean for Hong Kong as an insurance risk management hub when the city's trying to grow itself again?
I mean, that remains to be seen. I think it does come as a bit of a blow to Hong Kong. We all know there's been that bit of competition between Hong Kong and Singapore to attract the big international insurers and reinsurers. Swiss Re Corporate Solutions is a big brand and they have big operations, yeah. It's certainly a loss for Hong Kong. It remains to be seen. So I don't think this ends here. Sources tell me that CorSo may announce more changes in the region in the coming days. Some of the other markets may be impacted too, and there's likely to be some changes in the leadership in the region as well. So there is a lot more to come on this, and we'll be following this in the coming days.
So it just sounds like a few more late nights in the newsroom.
Yeah. Moving on, Joanna, you did a story on the product recall insurance market in the region. What can you tell us about it?
Yeah, so I've been speaking to underwriters at Liberty, Beazley, and Delta, and they said they're seeing increased demands for product recall insurance with, more supply chain contracts requiring this type of cover before proceeding with business due to, disrupted supply chains and fragmented global trade, forcing many companies to find alternative suppliers and manufacturers to manage costs. But, with new suppliers, it's just challenging to guarantee product liability and avoid defects and shipping delays. And this has motivated businesses to fight protection against losses and liability claims. And insurers that provide product recall coverage like Liberty, Delta, and Beazley expect that the demand for this type of business line will increase the next 5 to 10 years.
Joanna, as with most things these days, we look at how certain markets will be impacted by Donald Trump's tariffs, which seem to touch everything. Did anyone you spoke to touch on how the tariffs going to impact product recall?
So actually, the tariffs announced by President Trump may not have direct impact on the product recall markets in Asia Pacific. Products exported to North America are often excluded in the product recall wordings. So besides insurance companies, I also talked to a loss adjuster, Glenn Lloyd, who is head of product recall and complex product liability for Australia at Charles Taylor. And he explained that the US regulatory framework allows for significant damages. So people would claim compensation of huge amounts for a variety of reasons. And this makes litigation through the roof. So therefore, products that are exported to the US are pretty difficult to get insurance cover for in Australia and Asia. So companies probably have to get that cover out of London. But of course, this depends on the implications for different contractual agreements between the trading countries.
So, Joanna, it's obviously not all about tariffs. What other things are on people's minds in terms of product recall?
Yes, so other regulatory risks associated with product recall include manufacturing errors and non-compliance with safety standards and regulations. And, as the requirements continue to become stricter, insurers are more aware of the need to have product recall insurance to protect their reputation and brand.
So as supply chain disruptions continue, I think there'll continue to be demand for product recall in the region, and we'll potentially see more capacity coming into the market. So from turbulence in the tariff world to turbulence in the natural world, Andrew, you've been on top of all the latest NatCats around the region. Can you give us an overview of what's happened?
Yeah, it's been quite interesting recently. First of all, we had a tornado hitting the town of Leven in New Zealand on the North Island. There wasn't much damage there. Uprooted trees, damage to power lines, some fences blown down. There was one post on the Facebook page of a nearby council asking if anyone lost a tent, which I believe had blown across from that town. So, insurers don't expect many claims, and it's a far cry from the $6.5 million from 900 claims from the same town in May 2022 when it had its last tornado. And remaining in New Zealand, over the Easter weekend, everyone's plans for the long weekend were disrupted, and for the kids on their school holiday, with some quite severe storms. This is related to ex-tropical cyclone Tam. And we had some news from Tower, the Kiwi insurer. They released their full-year profit forecast a couple of days ago, and they mentioned the storms in there. They've had about 250 claims so far, but they have warned that it may exceed their $2 million New Zealand dollar threshold for a large event. So we're going to watch that space and see how they go. And also in that report, they mentioned they're still receiving claims from the Christchurch earthquake.
Christchurch earthquake, when was that? That was in 2011. They're still getting claims.
Yeah, they mentioned that's still on their minds. They're receiving a lot of challenges from this. That is due to external factors. This is a significant volume of reopened claims from undiscovered damage and also inadequate repairs, plus inflation since that 2010-2011 period.
So let's talk about a much more recent event that's still making headlines, the wildfires in South Korea that raged across the southeast of the country last month. Joanna, you've recently done an update on the claims numbers from the event. What can you tell us?
So the wildfires that hit the country last month was also a significant event. Not only the damage was the most extensive in the country's history at nearly 90,000 hectares, or 1.5 times bigger than the capital city of Seoul, with losses estimated to be almost $800 million. This event has also prompted government and insurers to revisit their approaches to the risks.
Joanna, when you say revisit their approaches to the risk, what does that mean?
For example, crops were the most damaged after the fires, as nearly 5,000 claims filed with insurers as of early this month. Over 3,000 are crop insurance. However, there are a number of types of crops that do not receive compensation. For example, like pine mushrooms or white vegetables. They are small scale but sensitive to the environment. So the South Korean government is actually planning to expand support for these kinds of, uninsured crops, referring to the support system currently deployed by advanced agricultural countries like the US, Japan, and Canada.
And Joanna, obviously you've been speaking to a lot of people in the market about this. What are the insurers telling you?
So for insurers, they're not sitting on the sidelines either. Christopher Au, who is WTW's climate practice and alternative risk transfer solutions lead for APAC, said that insurers will want, adequate rates, innovative risk management solutions, and they also want to revise coverage terms as necessary as well.
It's not a news podcast if we haven't discussed Trump and his tariffs. What's the latest on that?
This time something's emerged looking at port accumulation. These concerns have resurfaced. These had largely vanished as the global trade industry kind of kickstarted after COVID. But Southeast Asia is back in the spotlight with Trump's tariffs. And that's because a lot of the big container ports are in this part of the world, particularly in Asia, particularly in China. And as Trump's second term kind of really gets underway, there's potential for trade disruption, and that means accumulation of cargo, accumulation of vessels at these big ports in Asia and specifically Southeast Asia. So we're just wondering and keeping an eye out what's going to happen there.
What's interesting is most marine claims come from accidents at the port. And obviously, port congestion is a big concern for insurers. And especially in these times when ships are becoming bigger and bigger. So the port congestions that we're seeing now could lead to claims and challenges for marine insurers.
And then this links to something we spoke about on our previous podcast about the port fees in the US. If ships can't get into the US, what does that mean? Or they don't want to go to the US, that could disrupt things as well. So it's all, again, all linked to Trump.
Those were the big stories from the last week. So let's talk about what we're working on next. Joanna.
Yes. So one story we are watching and would like to follow up is the recent global expansion efforts of Japanese reinsurers, because they want to overcome limited domestic growth and, address issues of governance. And there are a few examples for this. MSAD CEO recently said that it plans to invest up to $5 billion in North America as the company aims to double operating profits in the region in the near future. Earlier this month, Mitsui Sumitomo Insurance said it will acquire a 15% stake in U.S. insurer W.R. Berkley in order to scale up their specialty commercial lines.
And Sompo's been quite active recently. What have they been up to in this area?
Right. So Sompo, after a recent merge of its domestic business and overseas businesses, it announced a significant restructuring of its operations, laid out a plan to change a business model.
And that's quite an interesting development we've been covering quite actively. They're internationalizing their business, announcing the plans. The CEO said that the Japanese business model is going to change, and they want to change faster than their peers. And clearly, MS&AD has some plans as well. They're merging their domestic businesses. They're restructuring their businesses. One of the things that I've been following is that they also seem to have some plans to restructure their European businesses. They're still trying to get to the bottom of it. It's a story that I've been actively following. So let's move on. What else is on the agenda, Andrew? What are you working on?
Yeah, there's a couple of stories I've got irons in the fire on. So the big news in Hong Kong that's got everyone excited is Manchester United, Liverpool, Arsenal, Tottenham, as well as Italian side AC Milan will be coming to the city in the summer.
Well, that sounds like exciting news for football fans in Hong Kong. But what's the insurance angle here?
Yeah, well, everyone in Hong Kong is excited about the new Kai Tak Sports Park. We had Coldplay here. We have the Rugby Sevens. So the next big event is going to be in the summer. And the reason insurers were talking to insurers about this is because in February last year, things got a bit messy. Lionel Messi, the Argentinian superstar, came to Hong Kong with Inter Miami and didn't play. He sat on the sidelines in his tracksuit, and to cut a long story short, everyone came to see him play. No one really cared about Inter Miami, with all due respect to David Beckham, but and a lot of people got really upset. So people have started looking through the contracts. There was a lot of claims, there was a lot of refunds. So I'm talking to the market and I'm trying to find out how specific can these contracts be? Can they name players? What about strength of teams, and seeing exactly what these contracts can and will say for these events in the summer?
That's quite interesting. No-show insurance. You can imagine Coldplay performing in Hong Kong and Chris Martin not showing up because he was not feeling it. It'll be interesting to see. I mean, unlike in the case of Inter Miami, people came to see Messi, but with these big clubs, obviously they have more than one star. It'll be interesting to see how that is different. I'll be very interested to see what you dig up, Andrew.
Yeah, I'm looking forward to get some replies as well. And just finally, one thing I have in the bank already is an interview with the CEO of Skuld, and that's I've already got that, and we're looking there at the P&I clubs and also what roles China and India are going to play in the future of kind of the marine insurance industry. So that's quite interesting, and I'm going to be looking at getting that out very soon.
Oh, this has been a great meeting. Joanna, you've got quite a lot to work on. Andrew, looking forward to some of your stories there. Let's get to work.
Thanks, Mithun.
Thanks a lot. Looking forward to see what we can dig into.
A special feature interviewed this week. Joining us from Sydney is Ben Qin from Parametric specialist Descartes Underwriting. Ben is the head of North Asia and Australia operations for Descartes and has been with the company since its launch in the region in 2021. There is a lot to talk about. We'll discuss the opportunities for alternative risk transfer solutions in the region and how it is evolving in light of the emerging risk landscape. Climate change, cyber attacks, supply chain disruptions, and Trump. There is a lot to talk about. Hello, Ben. Welcome and thank you for joining us. I understand it was a stormy weekend in Sydney.
Yeah. No, I mean, we had a nice weekend in the wine country. Plenty of sunshine. Thankfully, we caught a bit of rain on the way back from the traffic jams, but all is good. All is good.
So thank you for joining us. Today we'll talk about Parametrics. Obviously, most of our listeners are primarily insurers, reinsurers, and brokers. They are familiar with Parametrics, but to set the context, we'll start with what is the Parametric proposition and how does it sort of differ or complement the traditional indemnity insurance model?
Yeah, of course. The whole notion of parametric insurance, despite the name being a mouthful, it started from the notion in the 80s from what's commonly known as weather derivatives now, which is a much more complex financial instrument and only targeted very select traders, I want to say, like energy traders at our hedging desks, and you can do all sorts of funky stuff in that world. But effectively, the whole idea behind parametric insurance is to pre-agree some kind of a trigger and an event based on an independent data source. That's the widest definition. How parametric natural catastrophe insurance came about is pretty much in the recent decade, I would say, where the function of technology, insurance market maturing, and also we went through a bit of a catastrophe cycle, hard cycle recently, and to have it as a means to an end. The whole suite of parametric products, it's all aimed at natural catastrophe risks for now as the main offering. And it's really a natural fit in terms of the two going head to head together, right? So the whole notion of it being mutually beneficial for both the buyer, being the insured parties, both on the direct side, but also insurers, and also from the seller's point of view, so the insurers and the reinsurers, the people that are providing the capital. And I break it down in terms of the key advantages for the buyers. Speed and certainty on claim payments and loss payouts, that's definitely the key. The fact that an amount of money that you know for sure how much and when enters your bank account within X number of days within an event, that's really critical and really crucial, because we have seen some large catastrophe events and the fact that it could take days, hundreds of days or years for the final indemnity to settle. I mean, Kaikoura and Christchurch in New Zealand were two big earthquakes that basically are testament to that fact. In fact, I think in the US, it still takes 500 plus days on average for a big event to fully settle from an indemnity point of view. That's definitely a key advantage. And these days, when we're talking about fresh capacity and alternative capacity offered on parametric insurance papers, a lot of the buyers that otherwise cannot enjoy insurance protection or from a protection point of view or from a affordability point of view, they can enjoy it from a parametric point of view. So that's an added benefit. Likewise, from a coverage point of view, so we talk about capacity, we also talk about coverage where, traditional markets may be excluding certain assets or certain types of coverage or wording, like your classic application of parametric is to deal with a specific non-damage business interruption issue, where it could be a supply chain issue where you don't necessarily own an asset or you have financial interest over something that you cannot otherwise insure on a traditional basis. So all of that is, I would say, the three key advantages for the buyers and the insured parties. And on the flip side, for the sellers and for the insurers like us, we tend to look at it also from a speed and certainty of claim payments as well, because like the insured, the insurers also like certainty, right? The fact that it can be off your reserves, off your balance sheet, claim is gone and there's no capital or reserves set aside it. It makes it a true short tail class of business. And that's a value proposition on the flip side, on the seller side. For us, especially at Descartes, because we're effectively a platform for carriers and insurers that they have the appetite to write global natural catastrophe, but they don't have the know-how. So we provide that know-how and that expertise, especially our exclusive partnership with Generali globally.
It's interesting that you pointed out the simplicity and certainty of payments, and you brought up Christchurch, and just earlier today we were discussing Tower, the New Zealand insurer, yesterday announced that they have had to make some reserves for Christchurch, changes in Christchurch claims, and that's 15 years since.
How long ago was that? Case in point, right? Case in point. So we've had a lot of advocates, I would say, in the corporate space and in the public sector space that basically say, look, we are fed up with the indemnification process, whether it's a part of the value chain within the insurance industry, whether it's the loss adjusting process or the actual underwriting or the claim payment process. But something's got to give. It's taking a lot of time, and that's how we get a lot of the conversions through on the parametric side these days.
I mean, we've seen quite a lot of parametric programs being deployed in the region, especially in the last couple of years. But most of them tend to be around impact insurance, social insurance, where small payouts, simple triggers for the lower sections of the society. Descartes, on the other hand, has been focusing on commercial scale parametric solutions to corporations. How scalable is parametric as a value proposition? Can you give us some examples of how parametrics fits into that model?
Yeah, good that you brought up that whole public sector disaster risk financing space as well. I mean, we very much play in that space as well as the private sector sphere. For example, in the region, we are supporting, and we have supported ever since our own inception, both the PICRIC program, the Pacific Catastrophe Risk and Insurance Facility, and the ARC, the ARC, which is the Africa Risk Capacity. Yeah. So we support both of the programs as a lead reinsurer on both, and have been for at least 3 or 4 years on PICRIC, ARC as well. So they're one of our first clients. But I mean, they're two large World Bank schemes that basically it's all about micro insurance and social benefit, social welfare sort of things. And there's a few, you're right. There has been a lot in the news around the world, in the region. Several governments are looking at this, and there are several large ones in the pipeline as well. So we like those as well. In the private sector space, we are targeting medium to large corporates with our business model through our broker partners, and is to basically address any gaps faced by insurance and indemnity solutions in these various sectors. The whole notion of this protection gap and how traditional insurance is facing challenges with capacity or coverage, as I talked about earlier, we see more and more gaps open up on a way to how to make insurance relevant again, right, for these buyers. And to me, insurance offers you, protection and gives you sort of that certainty and that financial guarantee. And it's sort of like the glue that makes the industry stick together.
I mean, we've seen retentions go up, especially on the reinsurance side and across some programs. So do you see that Parametrics are a solution to sort of plug that gap?
It's definitely one of our key target areas in that space. And if you think about the dynamic, which happened already in the US, in European and Australian markets, where it's much more mature. So you see reinsurers, traditional reinsurers, especially on the treaty side, they shy away from the actual original risks, and they basically encourage or influence the direct cedents or insurers on the ground from writing less cat, and by moving far away in terms of the main cat programs, in terms of attachment points. And one of their levers is pricing and attachments, right? So we'll never see the lower retention points again, right? So I think anecdotally, everyone talks about moving away from traditionally what's a 1 in 5 year to a 1 in 10 year attachment point. Now everyone's looking at 1 in 20 year, 25 year plus minimum. So then you got to go, well, where does that gap go, right? Does it just become a bigger protection gap for the insured? Yeah, of course, right? We see either the direct cedents just actively, consciously moving away from those zones that otherwise become a black zone, cannot write, or do not write, do not touch, exclude, that kind of thing. So that leaves a big gap in there. So the role that we see for us, especially in a parametric fashion, is to basically plug that gap, either on the direct side, issuing original policies to the asset owners, the actual people without that insurance in place, or a portfolio of assets for the insurers, right? To basically say, well, can we plug that retention gap that you may still want to offer insurance on the ground for these people, so we can provide you what's called retrocession or reinsurance behind that as a retention stopgap or of some sort.
Obviously, it's quite interesting that we've seen insurers and reinsurers move away from attritional losses, covering attritional losses, and secondary perils are a big concern. We've just had a year of massive wildfires, California, Japan, Korea. Do you think sort of Parametric offers solutions to provide coverage and protection against some of these attritional losses?
LA wildfires is also a big event for us as well. But we see both fires and floods being topics, especially in that secondary peril space. Although we still see typhoons and earthquakes being the primary perils that are impacting the top 10 insured losses or whatever in the region, but we're starting to see the floods and the fires, they're creeping up in terms of the insured losses list.
And that's where sort of Parametric offers a solution.
So we've got both the fire product and the flood product, both in nearly all markets. Every insurer offers it differently, but we do like a satellite-based fire product where it's basically any satellite detected fire, as long as you predefine that little square and can declare it, we will consider that insured, and we simply measure it before and after the fire. So if it's number of squares burned, or it depends what you're insuring. If you're insuring trees or properties or whatever, we'll find a way to make it work. But effectively, that's as close as you can get to an indemnity product because it's satellite detected, right? Floods are a little bit tricky because it depends on timing, depends on whether the water comes from the river or the sea or the sky. But we've got a range of products that in that flood space that basically serves different levels of customers, from anywhere from an area-wide rainfall in a big basin in a big region to we're installing flood sensors now for big industrial locations that are exposed to river flood. So there's a evolving suite of both technology and also our global parametric appetite to tackle that flood issue. So it's a very interesting space to watch, I think.
Looking beyond NatCats, what are the opportunities for parametrics beyond NatCats? Cyber, which is very much the buzz now. Are there other opportunities for parametrics to be deployed?
Yeah, so we launched our cyber product in the French and the German markets last year for SMEs and medium corporates. And we launched it because we saw a niche or a gap in the market, as we did on our core NatCat products to plug that gap. The parametric side of it works as a predefined per day indemnity amount and it's based on the concept of outage per day of outage for that particular, whether it's manufacturer, industrial, or like an infrastructure type. We've had reasonable success on that product, and then we're going to launch it in Spain, I believe, very soon. Whether or not it's coming to Asia or Pacific, we don't know yet. I mean, it really depends on how we see demand in this region, and how we can basically plug it alongside with traditional cyber products. Aside from that, we've seen a lot more. Given the technology and given the dependence on technology, automation, AI these days, that there's a lot more suite of possibilities on the table for Parametric. So we've seen a little bit in like machinery breakdown, marine covers, some commodity pricing products, travel delays, and maybe even some casualty-based products out there. So we're scoping out a few as well. So we've got 10%, 15% of our workforce at Descartes is actually dedicated to research. So they've got a good job of, investigating what's out there that can be insured or whatnot. So there's some cool things on the horizon for us.
It's clear that parametrics will play a crucial role in risk management in the years ahead. Thank you, Ben, for joining us and sharing your insights. Thank you for your time, Ben.
Thank you, Raj.
That wraps up this episode of Between the Lines. We'd love to hear your thoughts. You can email us at editorial@insurancasianews.com, connect with us on LinkedIn, or visit us at insurancasianews.com. Don't forget to subscribe to our daily and weekly newsletters. I'm Mithun Varki. Thanks for listening.